Tushar, we'll just start in a minute. Let
Sure.
people join in.
Sure.
So it's 3:01. Let's start. Good afternoon, everyone. Welcome to our another masterclass session on VC Investment Trends 2020 by Tushar Kansal. Before we move to Tushar's session, let me just take you through Founders Genie. Founders Genie is based on the mastermind concept, which was formally introduced by Napoleon Hill in his book Law of Success, defining as the sum total of minds of two or more people who work in perfect harmony for the attainment of a definite purpose. A mastermind peer-to-peer mentoring group is used to help members solve their problems with input and advice from like-minded founders. Founders Genie is a well-constructed peer group which serves as an anchor for learning. We look to provide entrepreneurs to make their journey less lonely. The mastermind concept can help you accomplish in 1 year more than you could accomplish without it in a lifetime, if you depended entirely on your own efforts for your success. While we have read about it, we have had good fortune of experiencing it through our platform. Founders Genie is built on 3 pillars of high quality, quick solutions, and cost effectiveness. Its primary objective is to find solutions to any given real life problem. You can hire a pre-referred talent, look for mentors, explore synergies, find industry specialists, experts, and yet be free of spam messages. We are happy to announce you that Founders Genie provide you access to solutions at your fingertips via our app. To join our app, request you to scan the QR code at the bottom left of the screen, which will take you to our app. You can fill in the form, and if there is a fit, we'll get in touch with you and we'll approve you. We are happy to provide you our complimentary membership till limited time. Also, if you're an experienced industry veteran who is looking to help and guide startups, we will be putting up link to register as a mentor. Request you to complete the registration as a mentor. Now, without any wait, let me introduce to you the speaker of the day, Tushar. Tushar is a venture capital, ex-Deloitte, Brandcap, Guggenheim, and from Harvard Business School. Tushar is a founder and CEO of Kansaltancy Ventures. He's an accomplished professional with experience spanning multiple sectors from venture capital, Big Four consulting, LEC listed Systemas, India unit of CFO to CFO of Guggenheim Partners owned company. He is mentor and judge at entrepreneurship cells of IIT Mumbai, IIT Delhi, IIT Chennai, ISM Dhanbad, and such marquee institutions. Tushar has expertise of financial and business advisory, fundraising, and creation of documents, collaterals of VC funding. Over the years, Tushar has arranged funding for startups and growth stage companies in diverse sectors like edtech, fintech, consumer, B2B, B2C, agri-tech, disruptive, and deep tech as well as non-tech sectors. His expert opinion is often sought by leading business news channel and publication like CNN, News 18, VCTV, Business World, Business and Economy, Careers, and Digital Market Asia. He has come on 100+ talks. You can check out his YouTube link. He received executive education from Harvard Business School, MBA in Finance from University of Delhi, and BTech from Technological Institute of Textile and Sciences. Welcome, Tushar, for today's session. Over to you.
Thank you, Divyansh, and thank you the entire team at Founders Genie, CXO Genie, and Inflection Point Ventures as well. And thank you for having me for the 3rd time on your talks, and it has always been a very good experience delivering talks for your platform, and I hope that I add value in today's talk as well. Happy to have meaningful question and answers after the presentation. So I'll just start with my presentation. So today we are talking about venture capital investing trends. So I get a lot of companies who are from MSME space, SME space, even traditional big companies who always are very inquisitive as to the media hype on new age startups. And they always feel that the value which is being captured by new age startups on the balance sheet side, not so much on the profit and loss side, is something they aspire to achieve. And hence, it is very important to know why the new age money, the money belonging to family offices, venture capitalists, angel investors, why does it chase and run in a particular direction? There is a herd mentality as well, because it helps in building valuations. And you feel comfortable also. If 5 other funds are investing, then you feel comfortable putting in money in that same round with the same company. So there is a herd mentality globally. It's not only in India, it's a global phenomenon. So there used to be a time when Lee Fixel thought that since China is booming from 2006 to 2014, China was booming at 13% GDP growth annually, which was phenomenal. I mean, it was something which wasn't seen in the entire history of the planet, right since the last 5,000 years. A country growing, a huge country growing at 13% GDP growth. And Lee Fixel made good money. He was the founder of Tiger Global. He made good money in China. So he thought that the trends which have happened in China and prior to that in the West, the same trends will likely catch up with India, because we have a lot of similarities with China. We are a civilizational country. We are a huge population. We are a country which is high on consumer demand. China is the largest economy in the world in terms of PPP, purchasing power parity. It means the consumption side is very strong. US is second actually in terms of PPP. And surprise is that India is third. We are the third largest economy in terms of purchasing power parity. The only problem is that our currency is perpetually weak, because we have a lot of poor people. So government gives out a lot of doles and there is a socialistic mindset. So the balance sheet of the government is always in red. And so the banks are also in red, because the government borrows a lot from the banks. And that is why the interest rates are high for private borrowers. And because interest rates are high, they are not able to make good profits, and they have to actually save tax to generate some profits. So this lopsided structure of the economy means that in spite of being the third largest economy on PPP terms, when it comes to dollar terms, we are the fifth largest economy. On PPP terms, we are $12 trillion economy. In dollar terms, we are $3.5 trillion. So you can imagine the gap because of a poor rupee. Now, just catching on, this is about me. Divyansh has been very kind to give an introduction. What is venture capital? It is a link, connecting entrepreneurs with investors. Now, if you as a startup founder would go out there to raise funds, it is very difficult for you to raise funds. So because the investors, they want impressive returns. The end of the day, whether you are putting in your own money or being a venture capitalist, you are putting in somebody else's money, you have to generate returns. And your returns will be always compared with returns generated by other investors and returns generated by other asset classes and returns generated in other countries. So an investor will always think, why should I not buy copper as a commodity? Or why should I not buy real estate in Australia? Or why should I not buy gold? Or why should I not buy shares of HDFC Bank, the world's most costly share in terms of the banking performance? So an investor always compares, and there is a lot of uh, uh, you know uh, there is a lot of arbitrage which the global investors make. So so just a minute, I'm not able to see the screen. Yeah. So venture capital is a financing tool for businesses and an investment vehicle which offers exciting returns. There is a whole history to how venture capital came out on the forefront when it comes to a better mode of generating returns. But I think as we go along the presentation, I'll be happy to discuss on that. Now, some of the existing VCs in India and globally who participated with their huge success stories and made venture capital what it is today. Sequoia Capital, that they bought WhatsApp for $50 million, and within no time they sold WhatsApp for 2019 to $20 billion to Facebook. Now imagine if you were an investor in that Sequoia fund, what the kind of returns which you would have made in 2 years. Within 2 years, from 50 million to $20 billion. Kalari Capital, Vani Kolaji, Matrix Partners, Avnish Bajaj, Tiger Global, Leaf Excel. Uh, Leaf Excel was the one who started the trend of uh, of investing in India in a big way in 2013, 14, and then 15, 16. And he was the one who put in money in Flipkart in a major way. And he said that Alibaba became $100 billion in China. So why not a homegrown e-commerce story in India? And he backed the founders because he liked the founders a lot. And he also backed a number of other consumer B2B and B2C companies. And the whole trend of shifting the consumer from offline to online. E-commerce existed even like in 99, 2000, e-commerce existed. And 2006, 7, many companies came up. But it is just pure luck, you can say, that Flipkart was the one which got a chance to grow big. Axel Partners and Bloom. Then there are many others like K Capital, Elevation Capital, IV Capital. There are many. Now, India's top 20 VC funds of 2021. So, going by the number of deals, Better invested in 98 deals in 2021. Sequoia Capital invested in 88. Axel Partners 74. First Check is a venture builder. It's not a VC fund, but they invested in 72. Tiger Global is a growth stage VC fund, invested in 58. And you would be like surprised, like a fund investing in 98 companies in 1 year. How do they manage? Whether they even know the names of the founders? So the thing is, there is a kind of a spray and pray strategy that if the sector is growing, you take out try to be in the top three eventual winners of the sector. But there is a method to madness, so that is why we have very clearly articulated investment theses of these funds, which are available on their websites. iSeed, 314 Capital, 100x VC, Matrix Partners. Then in the lower deal counts, we have Elevation, Bloom, Anicut is doing very well nowadays, Lightspeed, Chirate. Now, this is the stage of venture capital and the life cycle. So, pre-seed is family and friends round, then angels, then seed is when the first major chunk of money given to the company, early stage, growth, late stage, and maturity stage. I'm sure all of you would be knowing this quite well. Uh, the sweet spot for a VC fund, we have proof of concept, which is basically just a student kind of stage. Then we have minimum viable product, where the product has taken shape, but the money it can generate hasn't taken shape. So that's kind of a MVP. Then comes the PMF, product market fit. The PMF is where the money earning potential of the business is already proven, and the product is already proven, and the stakeholders are more or less finalized. So that is the sweet spot at which late stage or growth stage funds like to come in, because whatever money they put in, it goes into marketing, it generates revenue, and builds valuations. So it becomes much simpler at that stage. Now, venture capital arena is hotter than ever. Uh, you know that India is, I think it has crossed 100 unicorns. A unicorn is a company with more than $1 billion valuation. And the speed at which India is churning out unicorns, it is matching the speed with which China was uh, turning out in the VC space in 2006 and 7, when it was growing at more than 13% GDP growth rate. India's ecosystem is growing at a fast pace. In 2021, we overtook the UK as the third largest ecosystem. To give you a number, in 2016, there were 436 startups registered with Startup India, the government scheme. Today, we have more than 77,000. So from 400 to 77,000 in 5 years. And it is growing like anything. I mean, I see people from all walks of life wanting to become either a startup founder or wanting to become a angel investor. And just the other day, I was there in an event, and there were two girls. They had left their job because they became mothers. So naturally, there was some time they needed to take off, and they created a startup as an opportunity where whatever uh, toys used by our kids, after they grow up, the toys we don't use anymore. So they take these toys, and they created a platform where they sell out these toys, and whatever money they generate, they use it for uh, expanding to other cities. So it was a very nice. I thought that, given the fact that the women participation in India in the last 10 years has gone down from 30% in 2012 to 20% in 2022, a drop of 10%. And I feel that COVID had a role in that, but still, that's a steep drop. So it was nice to see those women doing something good with their careers. Uh, Now, VC investments grew from 1.9 billion to 3.1 billion from 20 to 21. $100 billion will come in Indian startups in the next 4 years. Minicons are the one with valuations of more than $1 million. Unicorns, which are about to become $1 billion, and unicorns, which are more than $1 billion. So you can see the numbers. The minicons will be from 42 to 132 billion in 4 years. Unicorns will be 41 to 114 billion. Unicorns will be 180 billion to 620 billion. Now, the most number of active startups are in enterprise tech and e-commerce. E-commerce, the whole ecosystem has become quite mature. If today you were to start an e-commerce site, you have websites where you can just plug and play. Just start with the Spotify. Take any. You can create your store on any website, have logistic companies put their API. Everything is automated. Even the digital marketing is auto. I recently met a 24-year-old guy. This guy was doing a turnover of 30 crores. So I asked him, in 2 years he started back, and in 2 years he's doing 30 crores. So he's put his store in on Flipkart, and he imports boat type equipment from China, assembles it here, then has created his own brand. He pays, I think, 25 to 28% to Flipkart, which is their usual commission, which is way too high. And beyond that, he pays 12% to Flipkart. So anybody searches for boat or the headphones, then his company, the brand comes first. So he gets all that revenue from there, and still he ends up making 7 to 10% net profit. Although he wasn't satisfied with the model, so he's wanting to do his own website, the D2C way, direct to consumer. That's another story. Now, on the enterprise tech and e-commerce are the highest. Others are media and entertainment, 7.9%. EdTech has gone down. EdTech in COVID time used to be huge. At one point in time, I was dealing with 12 EdTech companies in a month. And it has gone down because people are back to the locations, offline locations. Enterprise tech, 18.7%. E-commerce, 12.8%. Fintech is huge because the fact that the traditional banking is breaking up. Banks are being valued only for their license, not for the paraphernalia, the offices and the huge staff and so much of cost they have. So the traditional banking is breaking up globally. And in India, the added advantage is the India stack, which was created by the government. Aadhaar, Aadhaar-based biometric online verification, UPI, the use of an email ID kind of ID for making transactions, the barcode, and the DigiLocker. So all these, the India stack, as we call it, has been an enabler. And today, the number of UPI transactions made by India is more than twice made by China. So we are number one globally. So fintech is doing very well. There are some problems. The problems are because so fintech companies are basically, there are many subsectors we will discuss later on. But in fintech, the lending sector, companies believe that it is a very high growth area. Looking at HDFC, the kind of very few non-performing assets of HDFC, because it always focused on retail loans and didn't focus on corporate loans. Banks who focused on corporate loans, their balance sheets are gone. In India, it is easier to recover retail loans given to individual people. So fintech companies are focusing on the data of the consumer and then targeting them to give loans, but mostly unsecured and on the click of a button. So just validate your KYC and you get approval for some kind of a loan based on your salary. So this model was copied from Alibaba's Ant Financial, which saw a boom. At one point, Ant Financial had lent out $2 trillion worth of consumer loans to retail investors. So fintech is hot, but RBI is now putting the brakes on the lending side of it. Consumer services will always be hot in India because the GDPs consist of consumption, investment, and exports. Our exports are very small. They have recently gone up from $300 billion to $400 billion, especially because of the PLI scheme of the government, Production Linked Incentive Scheme, which matches the schemes of China. Exports are small. Investments, after 2009, when 20 lakh crore worth of loans were given, corporate loans were given by public sector banks to private companies. And out of that 20 lakh crore, 13 lakh crore didn't come back. 65% NPA. No bank can survive with that kind of NPA. So the lending capacity of banks was severely hit for many years. And it's only now that their balance sheets have somewhat recovered. So investments are low, uh, exports are low, consumption is huge. We are a major consumer society. We consume a lot of products and services, and that is one reason why our GDP is $11 trillion on purchasing power parity basis. So consumer companies will always be hot, whether it is initially B2C, then they shifted to B2B, and now they are shifting to D2C. So it will always be hot in India. Now, venture capital across all funding stages more than doubled in 2021 from 2020. And growth stage capital recorded the highest jump of almost 300%, and late stage 250%. Now, a lot of people feel that early stage is a good way to invest. But the thing is, the missing variables in early stage, there are too many. But when you have the product ready, you have the office ready, you have the founders ready, you have the product ready, you have the revenue coming in, although the valuation will be more at which you will be investing, but there is a lot of comfort and safety. And that is why the at the growth stage, and there is no dearth of money floating around in the global ecosystem for this kind of investment. For growth kind of investment, late stage kind of investment, money is not a challenge. And that is why we see the huge jump in growth stage capital and late stage capital. Now, increase in mega deals. Average VC deal size in 2021 increased 125%. And they closed 1,070 mega deals, more than $20 million each. Largest investment was Byju's. Look at the valuation of Byju's. I think it's 90 times revenue or in that range. It's mind-boggling. I mean, if you compare with other edtech companies in the West, listed companies or the big ones, they are below 10 times revenue. So it is clearly capturing the growth potential of India in a way, because growth is what decides the multiples on which the companies trade. Also, the fact that Byju's is unlisted company. So if there were a negative news coming for any listed company, the share will fall. But these are held in private hands. So actually, even if the private company is down, doing a down market valuation on their balance sheet, but it will generally not come out in the market. So being unlisted, being in private hands has its own advantages. Now, there are 108 deals above 100 million in 2021. And total Indian startup funding in 2021 was $42 billion. And apart from this 42, $12 billion came in more. And you can see the number of deals which happened in the each ticket size. Maximum was below 10 million, of course, because those are small checks. Now, what is happening outside India? Silicon Valley pioneered venture capital. Today, the share of Silicon Valley in terms of VC funding is down to 22.7%. Only 22.7%. The action happening in Israel, Bangalore, China, Shanghai and Shenzhen, Hong Kong, Singapore, now little bit starting in Dubai also. Lot of action happening in VC space, and you can imagine. I mean, SoftBank came out with the Vision Fund, and Mr. Masa had a lot of money from his Alibaba investment, more than $100 billion, which he could give as collateral to the bank and take funding money. So he could put his share. And Saudi Arabia and UAE, they put in $100 billion in Vision Fund 1, $100 billion. So you can imagine the kind of money which is chasing this asset class outside of the US as well. 42% founders prefer remote setup, and VC money is moving to Asia, as I said. Outside America, $136 billion in 2020. India is an attractive destination. Number of funds, domestic 825, North American 442, other Asian countries 1. So by the number of funds, we are of course there. China hasn't been captured here, but I'm sure Chinese will also be having a huge number. In 2021, 150% growth in VC funding. We surpassed China. Okay, we surpassed China. China is facing some problems because the labor cost has increased by 10 times since 2006. Because of course, Mr. Jinping changed the export orientation of the country to consumption orientation. So that means more money in the hands of consumers. So they're buying more. But there are challenges in the country because a lot of their growth came because of huge debt, which was available for private borrowers as well as government at very low interest rates. India, the problem is that our interest rates are high. So our founders and promoters and entrepreneurs are always constrained. And by the country, you can see growth in VC funds, 581 to 825 in India, and USA 289 to 439. I'm sure it would have increased more now. Top 5 India startup hubs. I keep on getting a lot of investors, talking to a lot of investors. They say that Bangalore and Hyderabad throw up the best technology companies, genuine technology companies. And we have Bangalore as number 1, Delhi, NCR, including Gurgaon and Noida, majorly Gurgaon. Mumbai, I don't know. I hardly see companies from Mumbai. It's very sad. Pune, I see a lot of companies. Hyderabad, I see a lot of companies. Mumbai, I don't happen to see. I don't know what is the problem there. Delhi NCR was the top destination for bridge funding. Bangalore second, Mumbai third, Hyderabad, Pune. Then Bangalore was the top destination for growth stage funding. Delhi NCR second, Mumbai third. Bangalore was the top destination for late stage funding. Delhi second, Mumbai third. VCs are cashing out. You would have seen that earlier in India, if you want to come out with an IPO, SEBI had very strong rules and regulations. You should have a profit in the preceding 3 years of the IPO. 50% of the IPO issue size has to be sold to retail investors, means people who are putting in 1 lakh rupee each. And if you are not able to subscribe your IPO 50% to retail, your IPO devolves. And it leads to a very bad name in the market, and you can never come out with an IPO in the Indian stock market. Like Imar MGF, their IPO devolved because they could not sell 50% retail quota. So these were all huge challenges to anyone wanting to come out with an IPO. And the result was that promoters were shifting their holding companies to Singapore, like Flipkart and many others, and to Dubai, although their stock market is nowhere, but to cash in on the liquidity, private liquidity available, and US, especially NASDAQ. So all the benefit of business created in India, the value creation on the share side, on the shareholding side, was given away to countries abroad. So SEBI changed the rules. Now your retail quota in IPO is only 10%, up to 10%, minimum 10%. And even the loss-making companies can come out with an IPO. So that is why we saw the IPO of Zomato, Nykaa, Paytm, and many others. Policy Bazaar. Now the promoters had already taken investments from investors at very high valuations in the private rounds. So they had to come out with high valuation in the IPO. Now, most of these IPOs are trading below their issue price. So market, values the companies. It has its own logic. So now I think there will be, and in the last, especially 1 year after the funding winter has come in and US is in a recession, almost in a recession, the valuations have come down by around 22 to 25%. And the same is getting reflected in the IPOs of these companies as well. And the companies whose business model was cash burn to generate revenue, they are the ones whose share price has crashed more. There was a ranking which came out of uh, of uh, the profits generated by top 10 unicorns in India. Ranked the companies by profits generated, and the number one and number two were Zoho and Zerodha. Both of them never raised investor monies. So the founders were clearly very conscious that they have to run the show from profits. So their business model should be profit oriented. And the founders who had money from the investors, they were not so conscious. So this was captured in that ranking. Now, because the IPOs are doing well, VCs are cashing out. You can see by public market listings, almost 12 IPOs have happened. So VCs were able to get an exit. In India, exits have been a challenge. It has been a big challenge for a huge number of investors, and opening of the IPO route will make it easier. And if you are not able to come out with an IPO, or you are not able to get follow-on funding, then VCs do mergers and acquisitions. I have an investment in a startup. You have an investment in your startup. Let us do a shared swap or some kind of financial engineering. Now, top 5 IPOs by exits: Paytm, Cartrade, Policy Bazaar, Krishna Institute of Medical Sciences, and Nykaa. Nykaa is very fortunate. They are amongst the few new age startup companies to list on the stock markets which are generating profit. The total profit of Nykaa for last financial year, was only 4 crore rupees. But still, market loves that 4 crores, and its value is more than the listing value. It is trading at a premium. Of 24% correction for startup investments in 2022. This has already happened. So whatever deals we are seeing a reduction in valuations. Now, where is VC money going? Fintech. Fintech will always be hot. Just the way BSNL and MTNL died after private telecom firms came in the Indian market. Similarly, the banks will also die because their model is no longer profitable. They have cost centers and hardly very few profit centers. And India is a price sensitive and cost sensitive and quality sensitive and service sensitive market. So generating profits in India is not so easy. But someone who makes a PMF in India, there are investors who understand that once a PMF is created in India, that product can be sold in 180 countries because it is a PMF created in India in a very, very challenging market. So fintech, whatever India stack we have now, all the other countries are asking for the same stack. They're asking for Aadhaar, they're asking for UPI, and banking as a traditional entity will go down. The only value for banks, you would have recently heard that one of the banks, government sector banks, was sold to Singapore bank. This one, Bank of Singapore. No, DBS, Development Bank of Singapore. And the reason why DBS bought the bank, in spite of that bank having 36% NPAs, 36%, was because of the license, because they would like to operate in India, especially on the retail side, and especially giving out retail loans. You can imagine HSBC has the highest multiple of its shares at which the share trades as compared to any bank in the world. Why? Because it operates in India, huge growth, retail loans doing very well, very few NPAs. And so DBS wanted to capture that growth. So they paid for acquiring that bank just for the license. And so fintech is likely to grow. Insurance, we are very underinsured country, but now after COVID, people have become quite aware, and insurance market is growing like anything. Investment technology, fintech, and SaaS. SaaS has been growing since 2010 almost. It is quite mature in India. Now, state of fintech funding, it recorded 3.7 times jump in 2021. Total funding was $20 billion, deal count 1,059, and notable investors Sequoia, Tiger Global, Axel. Top funded sectors, 46% was payments. So you know that the government created Beam app, but Beam did not go anywhere just because of the agility of the private companies to capture that UPI payment system space. So Phone Pay and Google Pay, they have taken the market. And lending, lending is a very complex subject in India. Fintech SaaS is huge. Uh, Girish Mathrubhumi's company, listed on New York Nasdaq, became a $1 billion company, and SaaS doing very well. Neo banking means everything will happen on the app without you wanting, without you having to touch base with any employee of the bank. So neo banking means everything is automated. Everything, KYC, lending. You want to purchase a mutual fund through the bank. Everything is automated. Insurance tech and investment tech. Now, green tech and sustainable investing. You know that temperatures are rising across the world. Pakistan saw 33% of its area submerged by floods, flash floods caused by receding glaciers and sudden downpour. It is because of the climate. We have floods in Mumbai, Bangalore, a lot of flooding, and very strange weather phenomena. The refrigerator of the world, Arctic Circle and Antarctica, they are melting up. So if they go away, then there is no refrigerator on this earth. So it become really very challenging. And we live in a very fragile part of the world, very fertile area. The glaciers in Himalayas are receding. They supply glaciers in Himalayas, supply fresh water to 40% of the global population. India, Nepal, Tibet side, Burma, Myanmar, Pakistan, Southeast Asia, Mekong. And recently there was a news that there were more than 100 dams which were built on the Mekong, and the levels of water in downstream countries came down by almost 4 meters, and their whole agriculture suffered a lot. So we have to build dams to store the water, uh, but at the same time it causes environmental havoc. And you would have seen that Mr. Mukesh Ambani has pledged that his next area where he will be investing would be green tech. And he's buying up companies which are creating new technologies in like sodium ion technology, solar panels, solar software, so hydrogen. And I think that desalination will be a big thing, because water levels are going down, groundwater levels. So desalination will be very huge. Although now desalination right now is very costly. The more research and development will happen in that technology, and the price will come down, and it will become quite huge. So Chennai is facing a major water challenge, and they are thinking to install desalination now. So the growth rate for investments is growing up because of the obvious challenge and opportunity. So from $10 billion to it will go to $76 billion by 2030. 40% of India's electricity will be generated from renewable resources by 2030. EdTech became very hot in COVID time. So there was a boom, and global edtech also took a boom, and it will go from $750 million in 2020 to $4 billion in 2025. Fintech unicorns in India: digital payments, ChargeBee, Cred, Grow, Zeta, Paytm, CoinDCX for cryptos, Echo for insurance, CoinSwitch, Kuber for cryptos, InsurTech, PolicyBazaar, Digit, Retail, BharatPay, Pine Labs, Razorpay, EdTech, Vedantu. State of EdTech funding in India: enterprise EdTech 5%, test preparation 64%. That's huge. And K-12 means 12th class 5.7%, online certification 22%. That's also quite huge. Now, factors leading to growth of EdTech: internet. Geo came in. After Geo came in, India became the largest data consuming country on the planet. Before that, we were in shambles. Gamification: I saw this company came to me. They have Mr. Amitabh Bachchan as the brand ambassador. 45 crore turnover in 2 years, just on the back of gamified content. And so gamification, and you would have seen your children on the games. They don't get up. 5 hours, 10 hours. It's so sticky. It's more sticky than the smartphone. And that is what that particular phenomena is what is being captured in the metaverse. So if you have games who can make you stick for 10 hours, why not normal websites using AR and VR? They can also make you stick to the screen. And some key edtech players: Byju's, Unacademy, Vedantu, Topper, Upgrad. E-commerce has transformed the way business is done in India. The market from $46 billion in 2020 to 111 in 2025. Number of users from $100 million to $300 million. Number of people, 300 million people, almost 30 crore people by 2025. Now running the show: Axel Partners, Helion Ventures, Nexus Venture, the usual suspects: Tiger Global, Kalari Capital, SAF, which is now Elevation, IDG. Now, state of e-commerce funding: D2C is right now 17%. It will grow up. E-commerce is 5.7%. Social commerce like Meesho and others like 5.6%. B2B will grow up. Right now it is 17%. Marketplace is 54%. But now the problem which is coming is that those who are creating new marketplaces, for them the cost of digital marketing is way too high unless they do it intelligently. They do content marketing, they do SEO. So marketplace is becoming a little bit of a challenge now for the new marketplaces. I mean, they require dollops of funding to make their platform sticky and to lock consumers and the demand and the supply side. Factor leading to growth of e-commerce: increasing internet user base, hyperlocal logistics, rise of digital payments. So hyperlocal logistics, we have 10-minute delivery now, a rise of digital payments and customer engagement. I don't agree with the 10-minute delivery thing because it endangers the delivery guy in a in the roads and cities we have in India. But I think it is a copy of the West. So some key e-commerce companies in India like Flipkart, Myntra, Lenskart, Nykaa, 1mg. This is about the presentation, and I would uh, throw it open for any questions you have. Thank you so much.
Thanks a lot, Tushar.
Thank you.
It was a great presentation. Would like to ask the members to start putting in their queries in the Q&A section if they have any. So Tushar, couple of questions which we have got here is, one is from Gopal Krishnan. He says, just to recheck the figures flowing into the startups in a year, other reports says USD 30 billion to 40 billion every year. Your figure is much less. Is your figure only for early stage startups that is seed and may be up to Series A?
Yeah. The 3 billion figure was early stage. Otherwise, the total amount which has come in is more than $42 billion in 1 year, 2021.
Great. So Prateek Sharma has few questions. First, he appreciated great points made in the presentation. I like it very much. Says that while the valuation correction has come in due to exit issues for VCs from previous startups, has investor thought process now shifted to looking at small profits are better than huge valuation and herd mentality?
See, I mean, it's a chicken and egg story. The thing is, whether you create a business first, lock in the consumer, make him very used to your product, and then do the monetization, like Paytm is doing. So Paytm is increasing. It has cut down on cashbacks, and it is trying to monetize more. Zomato is also trying to do that. So if you are ordering from Zomato, a 800 rupee kind of order, if you go to the restaurant, you will find out that it costs hardly 400 rupees. So Zomato and Swiggy are now charging almost 40-50%, just because there is a huge pressure on them on the cash burn. And but the thing is that these are very operationally heavy companies, right? So there is a challenge. So investor would always like to see profits. But how do you get profits? I mean, you try to have a pricey product. There is some new company which will take funds and come in and undercut you on the price. So end of the day, that's why investors are shouting moats, show us moats on the business, show so basically they want protection of the business model, so that anybody with deep pockets coming in and challenging you, like Mr. Mukesh Ambani. uh, I've worked in two telecom companies, Aircel and MTS, and because there were 11 players in the sector, nobody was making money. I mean, I was in a meeting with SBI, very senior guy. He said, debt we have lent to 10 out of the 11 companies, all of them are in losses. How do you make money? So Geo came in, and Geo came out with zero pricing, zero. And the companies started folding up. Everybody started leaving India. The best companies in the world left India: AT&T, Saudi Telecom, Maxis Malaysia. Everybody left huge NPAs on the banking sector. And after Geo killed everybody, only Geo remained, Airtel remained, and Voda is almost a dead horse. And government, BSNL and MTNL, the sick man of India. So now Jio and Airtel one day suddenly decided, let us earn some profits. They suddenly increased the pricing by 30%. They earned more than $1 billion every year just because of that 30% increase. And nobody can say anything. So it really depends on the sector. I mean, also, like today, if you were to say, ask Mr. Agarwal of Haldiram's whether he makes profits, he does make huge profits. And his business model is you can't really compete with that kind of a model. So it really depends on what you should have the clarity. uh, udan people used to say that, just like they are saying about cred, that when will it make money. So Udan was $1 billion valuation, the turnover was 60 crores, and they said, once people are used to working on our platform and the middlemen are gone forever, then they wouldn't be able to leave our platform. But they were lucky. They were lucky because that is exactly what happened. From 60 crore to 1300 crore turnover, from 1300 crore to 5900 crore turnover. They're still making huge losses, but they're able to monetize. And the investor, there is a huge money floating around in the global system, and everybody is happy to participate in a growth story, even if it is a loss making story.
Thanks, Tushar.
Thank you.
So we have couple of questions. Members want an insight on different sectors of funding in India, like medical devices, then investment trends in metaverse and agri-tech.
Okay. Okay. Metaverse, Web3, blockchain, crypto, AR, VR, metaverse. India is kind of a laggard there, because the government regulation is not very clear. There is a regulatory overhang. 40% of the metaverse and Web3 companies have shifted to Dubai because Dubai is majorly promoting that, and a lot of money is available, and there is no regulatory overhang. So what do you do? I mean, today you create a crypto exchange. Some government minister gives out some statement that, we don't like crypto. Then some minister says we will kill crypto. Then the whole investor, I had so many crypto companies. To the Indian investors, the story was, give us a clarity. Nobody likes sword on your neck. So that is the problem. But India is a huge gaming consumption market, just like China was. And Mr. Xi Jinping killed the not killed, but really subdued the gaming sector because, see, they only have one kid every parent, and this kid is playing games 10 hours a day. It is not good for the economy. It is not good for the family. It is not good for the economy. It is not good for the country. So he placed major restrictions. We don't have such restrictions in India. I am a person who would say put these restrictions. But look at Dream 11, $350 million profit. 32 crore Indians are on Dream 11. That shows the pent up demand for people wanting to do betting. But again, the law on betting is not clear. There is no central law, and it is being guided by a Supreme Court judgment, the game of skill versus game of chance. So wherever there is a lack of clarity, wherever there is overhang, uh, it is the sector goes in fits and starts. So that becomes. And on medical devices, healthcare, I mean, healthcare India will always be huge. Our food pattern is so lopsided that we have cholesterol problems, heart problems, sugar problem, liver problem, overweight, obesity, and all these things are very high in Indians. So healthcare sector will always be very strong in India, just like education sector will always be strong in India. Thank you.
Thanks. Uh, Anshul Garg wants to ask any views and trends on cross-border B2B startups?
Don't go into it. I had two companies who were into cross-border B2B startup. There was a company which had started with an office in China and another office in Silicon Valley, and anybody sitting in the world could order on that website. It was an e-commerce website, and the products would be shipped from China. And this company got funding at more than $1 billion valuation. but this was 10 years back, and that company folded up. So the reasons are many. First of all, there are custom issues, custom duty issues. So today, if you are ordering from Amazon US, then they certify the product which they have sent as a sample. If they certify this product is a product for personal or commercial use, it will attract a custom duty, and the custom duties vary from country to country. Then Russia-China war comes, the supply chains break down, the logistics chains break down. There are huge number of issues. So a cross-border thing is, I would say, it is a non-starter.
Thanks. I'll take one or two more questions, and we can maybe take down all the queries later, mail it to you, and take the answer.
Sure.
Another question from Prateek Sharma is, do you feel copying business models from the West is in reality not working for Indian market?
See, we are an English-speaking country. Out of 1.3 billion people, almost 300 million people know English well. Other people, they know English breakup. They don't really speak fluent English. But out of these 300 million people, there are 50 million people whose purchasing power is really nice. And these people are the ones on the backbone, they are the backbone for any consumer side company. Now, the thing is, US has a totally different purchasing power. For example, 10-minute delivery. Why is it popular in the US? Because you have to go for grocery shopping in malls. You have to go take your car, park it in a parking, then you have to go inside. It is a whole, it takes a long time. In India, you just give a call to your neighborhood kirana guy. He will send over the product, the cheapest price. So the thing is that a lot of copying has been done. Like Flipkart was a copy of Amazon. It started by selling books, just as Amazon started by selling books. But frankly speaking, in India, it works to a large extent because we are followers of the West and we look up to the West in everything because we are English speaking. We are brown people kind of. So that works in India to quite an extent. But in many cases, it won't work. Like this 10-minute delivery.
Great. So considering the time, Tushar, will just take one last question.
Sure.
So it's a question from Vignesh. How the geopolitical issues will help or challenge the startups who are dependent on VC money, which is funded from outside India?
Geopolitics, see, we are a country where in our education system, we are made to learn about the whole world. But this is not true for any other country. So in the US, if you ask them about India, they would have learned till 12th class, okay, some temples, some poor people, some poverty and something like that. They really don't know about the world. So they are in their own zone, and dollar is the reserve currency. So the world, 64% global transactions happen in the dollar. So the VC money is actually driven by the dollar, and which means by the American people, which means by the Western people, the Europeans also. So geopolitics only matters to the extent that it hampers the supply chains. It hampers the business generated by the companies. And so, you know that any market works on three things, on the liquidity, on the growth, and the liquidity, the growth, and there was one more I forgot. So the main thing is the emotions, that what is the running emotion in the market. So what happens is when these geopolitical things, there was an oil problem, the price of oil went up, the price of wheat and agriculture commodities went up. Because of that, inflation increased. Because inflation increased, people started facing a problem. And because people started facing a problem, the sentiment came down. And money is there, liquidity is there, investment money is there. Even in India today, all the funds are sitting on the sidelines with huge amount of money. but sentiment is down. So that sentiment creates a problem.
Thanks a lot, Tushar,
Thank you.
for all these insights. We'll are left with few questions, so maybe we can share it with you one-on-one later.
Sure.
So,
Thank you so much, Divyansh,
thanks a lot for your time.
My pleasure. Thank you everyone for coming, and thank you so much, Founders Genie and CXO Genie once again.
Thank you. And for the members who wanted to take up the opportunity to scan the QR code and register on our app, we are just going to keep this open for another 2 minutes. Links to the same are already posted in the chat box. You can click from there as well. Thanks, Tushar, for your time.
Thank you, Divyansh. Thank you, everyone. Thank you.
Abhishek, I think we can now close the session. Thanks for your time. Thanks, everyone.